So Larry, we've been sitting here talking about a lot of different things, and you've been on both sides of the table. You've been on the security side, you've been on the fixed side, designing products on both sides. I mean, you've seen it all. You've got more securities licenses than imaginable. Recently, we've been hearing a lot of talk, about safe money, the flight to safe money. Every time you open up a trade rag, that's really all you see anymore. And I'm trying to figure out, how do you define safe money?
That's a great question. Safe money is money that you can't afford to lose. I mean, that's simply put. I'd like to go a little bit further, though, and trying to imagine one of your clients and the client coming to you and say, I can't afford to lose this money. I'd rather be it parked under the back in the backyard under a tree. That is safe money. So there's a little bit of worrisome in there from a client's perspective as to what's going to happen with this money. Bottom line, can't lose it.
So Larry, you've gone on and on about safe money, and I get it. But at the end of the day, so what? Why does an advisor really need to be concerned?
Well, they've got another customer. I mean, that's rule number one. But beyond that, you've got a flight to safety. People, investors, are going to move their money where they feel they need to from a protection standpoint. Now it's fight or flight. But there's another aspect to it, and there's a flight to other financial advisors who get it, or who are offered the types of products that give the guarantees that are necessary for the client so that they don't lose their money. You've got wirehouses that are creating equity-linked CDs. You've got banks that have got equity-linked CDs. These are product that recently came out and made available, and then you've got wirehouses that are now getting into this new breed of product, a fixed indexed annuity.
Gotcha. So this is more of a defensive position, would you say?
Oh, absolutely. To the point where I had a recent conversation with a financial advisor here in Southern California. He was concerned that he was going to be losing a client, and a very large client, because what would happen is not only would he lose a portion that would go into this quote-unquote safe money product, but the entire $1 million portfolio would go away as well. So not just the safe money position, but the other investments too. And he was concerned about losing that. So he came to me and says, okay, you guys understand the safe money, help me. What do I have to know about safe money, how it works, why it works, the types of products that are available for the safe money solutions?
You obviously work with a lot of advisors. What options have typically been available in the past for their clients, what we'll call safe money?
Sure. I think rather than going into what's available for the safe money, because safe money has really just become in vogue, if you will, lately, let's look at reducing volatility, because a lot of advisors use certain types of investments to reduce the volatility in portfolio, hopefully getting a guarantee, if you will, that the client won't lose money. Well, typical are target date mutual funds, where the flight path actually gets more conservative as the investor gets closer to retirement. So you see a lot of those in 401k plans. Other options are option strategies, long-short portfolio's. You've got dividend-producing large-cap funds, large-cap mutual funds. And now, there's this new mutual fund or exchange-traded fund out there that actually is a reduced volatility fund. So all those products were available and are available today to hopefully reduce volatility. I say hopefully because it's not a guarantee. All right, clients are looking for the guarantee. The backyard, that's a guarantee to them. All right, so what is that guarantee? No loss principle. Those clients, if you're a financial advisor, you're not coming back with a solution that they're comfortable with so that they don't lose their money. They're going to go on a flight to safety, and that flight to safety being money market accounts, CDs, bonds. And there's another option that's available and has been available for many, many years, and that's a fixed annuity.
So, Larry, we've talked about how you've sat on both sides of the table. You've been awfully successful recently at converting guys that I would consider your security guys in and out. They just don't want to hear anything else. They've never been exposed to any of these other products, and they've always shunned them. How have you been successful in getting those security guys to really open up and listen and be receptive to, a product that, is a little bit on the edge when it comes to at least their world?
Sure. I guess where I would go with that one is the advisor, they need to want to hear. So when we started the whole Safe Money webinar programs back about 3 months ago, we did get a few financial advisors to listen and want to learn more. So they have to be open. All right. So just like a financial advisor's client has to be willing to listen, the financial advisor has to listen as well. So they're looking for something, they're looking for an alternative for their client. They're looking for something that is somewhat similar to what their client has had in the past, but guarantees the principal, guarantees no loss. And lately, and this I think was the big converter for a lot of them, was these new breed of product, fixed indexed annuities, offer enhanced benefit guarantees that a lot of these financial advisors are used to with variable annuities. So they've heard the pitch. Maybe they didn't follow the pitch, but they've heard it. And these enhanced guarantees are income rider guarantees, death benefit guarantees. So some of the things that they heard before are there today. So from that standpoint, they're not changing. The other thing is explaining to them how a fixed indexed annuity works. So again, they have to be open to listen, but explaining to them how it works and how an uncapped strategy might be more preferable than a caps strategy. But bottom line is giving them the solution for their client, giving them what their client is looking for so that they, the financial advisor, don't lose those valuable assets under management in the flight to safety.
So let me ask you one more question, Larry. As someone who has designed security products, private placement life insurance, countless variable type products, what would you say is the biggest change or enhancement that the fixed world has made to really embrace what a securities advisor really is all about? What have they done that has really changed the game at the end of the day to say, come on over, the water's good on this side, it's not the dark side anymore? What's been the one significant change, do you think?
I mentioned the words before, uncapped strategy. I think that probably is the closest thing to a variable annuity that we could get to. But Mike, I think it's actually something more. It was their client. It was that tipping point where their client is now coming to them and they're in need. They need help. That the advisor had to start looking outside of the norm. And so the advisor's looking for solutions. So we've seen it in the last few years. Advisors are looking outside of those normal products. I happen to think that that's really what the game changer was. There's all these different strategies available. Some have been extremely successful, but the company that was able to, or companies that are able to, bring a product that looks, smells, and tastes like something that these guys are used to is going to win. And giving them enhanced benefit riders that are similar to what they've had in the past, that are giving the client what that client is looking for to help preserve for their retirement income, that's the game changer.
So Larry, we've talked about, safe money, the advisors that have embraced, some advisors who haven't embraced. For those advisors, those financial advisors who haven't embraced some of these other safe money type products, what would you say to them? I mean, what's the call to action for them?
Well, Mike, we've got the boomer generation that is just now retiring, as I said before. They're going to go through for a 20-year period of time. So if the financial advisor isn't losing valuable assets today, they will in the future. Not just to a bank for the CD purposes or a money market purpose, but they'll lose it to other financial advisors that have embraced the concept of safe money and the products that support safe money. The financial advisor needs to make a move from the traditional financial planning to income planning. Bottom line, they need to call us.
Okay. I agree with you. They need to call us.